The next week will be very decisive for the US stock market and also for the global stock markets, because on Tuesday the CPI data will be published, and on Wednesday it's the FOMC meeting. That is one of the very strong non-technical reason that why we have seen a very limited movement in the S&P 500 in the previous week. Other than that, there was a technical reason why we have seen this a very limited movement in the S&P 500, and this technical reason is not because of the S&P 500. Rather, this technical reason is in the Dow Jones. Because of the Dow Jones, the S&P 500 failed to give a proper upward movement or a proper downward movement. Now, whether the S&P 500 and the entire stock market is going to make new highs or new all-time highs, or whether the market will enter into the correction, it will be decided on Tuesday and Wednesday. And also, let me clear these two things, that Feds are responsible for the recession, market is responsible for the inflation. Feds, they cannot create the inflation, market cannot create the recession. Okay guys, now I'm going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So this is the saturation I was talking about in the Dow Jones and the S&P 500. It is actually on the weekly chart, and because weekly and monthly charts, they are the heavy charts. That is why their impact is felt not just for 1 or 2 days, but for an entire week or more than 1 week or for like 1 month. So I will show you the weekly chart of the S&P 500 and also the Dow Jones. Second point of the agenda is the FOMC and the CPI. The CPI will be published on Tuesday. FOMC, the Federal Open Market Committee meeting, it will be held on Tuesday and Wednesday. But only on Wednesday the decision will be published, and there will be a press conference of the Federal Reserve Chairman, and that will actually make or will bring heavy movements in the entire US stock market. Movement in the bull side or the bear side, it will actually depend on like what will be the outcome of the FOMC, and not just the FOMC outcome, but what will be the comments of the Federal Reserve Chairman. If you notice that in the previous FOMC, it was actually the dovish comments of the Federal Reserve Chairman that helped the S&P 500 and the entire stock market to come into this or to give this unidirectional movement. Otherwise, that was not possible technically. So I will discuss that in detail. Third point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, you can see that very choppy movement. Okay, the choppy movement, it can again be seen in the picture. Okay, so there is a specific condition for that. I will discuss that here on the daily chart. And there was one more development on the daily chart, that this is a bull trend, right? But now on Thursday and Wednesday and Thursday, actually the S&P 500 changed the trend from the bull trend to the neutral trend. Okay, because of the change in the MACD and stochastic RSI. But on Friday, it has regained its bullish trend from neutral trend because the stochastic RSI has realigned bullish. However, if there comes another heavy fall, like 1 or 2 more bearish candles, then again it will re-enter into the neutral trend. So I will discuss all of these things. The last point of the agenda is the probable movement of the market, means the probable movement of the S&P 500, Dow Jones, Nasdaq, and the entire US stock market from December 11th, which is Monday, to December 15th, that will be Friday. So whatever is going to happen from Monday to Friday in the next week, I will discuss in the last point of the agenda. And guys, once again, next week is a crucial week, very critical week, because next week it will be the CPI, just 1 day before the decision will be published, and then on Wednesday it will be the decision and the press conference. Okay, so market, so there will be very heavy volatility in the entire US stock market and also in the global stock markets because of this particular event. Only after Wednesday the things will normalize, and we will come to know whether this will be the direction or this will be the direction. So again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And here I'm going to talk about the S&P 500 on the weekly chart. Okay, the big picture. So this is the weekly chart. On the weekly chart, if you look into this, the last candle, it's a bullish candle, a green candle. Okay, and the closing of the candle was at 4604 and the previous closing was at 4595. So we can say that the S&P 500 in the previous week has gained only 9 points. That's it, nothing else. Okay, and this candle formed in succession to the previous bullish candles, indicating bullish sentiments. Simple. Bullish sentiments in a manner that even if the market, the S&P 500 and the Dow Jones, okay, even if these indices fail to move up, but at the same time these indices has sustained very well, and have not given up. Technically, let's see what is there. So technically, if you notice that as of now all of the technical indicators are aligned, okay, as they were supposed to be, okay, in the bullish direction. Everything is bullish, everything looks bullish, but the problem is because of the stochastic RSI, okay, it is saturated. So you must understand that S&P 500 has given its first saturation, okay, after 1 2 3 4 5 weeks. Okay, however, the Dow Jones, it has given its second saturation, second weekly saturation, okay, after 1 2 3 4 5. So the fifth candle, okay, this was the very first saturation, and because there was a saturation on the weekly chart, so it has confirmed that if there will be any bullish movement, then this bullish movement will be very limited or extremely limited. And as soon as the Dow Jones goes beyond 36,246, and in all of these the updates every day, it was very much clear that if the Dow Jones moves beyond 36,246, then it will become extremely unstable, heavily unstable, and then it will be forced, or it can give sharp downward movement, it can give a sharp drop. Okay, so this can happen, and because this will be seen in the Dow Jones, this means that it will not allow the S&P 500 to move up. It will, so if whenever the Dow Jones will come down, so the S&P 500 will also come down. Okay, so this was the second weekly saturation in case of this, the Dow Jones. Now there is an interesting thing. Okay, if you notice that if you watch the weekly technical analysis, okay, that was there for the week of October 30th. So what happened is that here the S&P 500 gave the first saturation, not on the weekly chart but on the daily chart, the first saturation. Because of that, the first saturation, it was clear that now the S&P 500 is under obligation to give a bullish reversal, and this can happen anytime, okay, from Monday onwards. And from Monday onwards we have seen that on the daily chart, okay, that was from Monday was October 30th, that there will be a reversal. There was a reversal on Monday, then Tuesday there was a reversal. Okay, remember, I'm talking about the first saturation, okay, when it hit the first saturation, and that was on the daily chart, right? However, we have seen the first and the second two saturations on the weekly chart. So you can understand that how heavy or how extremely heavy the condition is there. And because of this heavy or extremely heavy saturated condition, that see, if we just forget about this, the CPI and the economic events, okay, in that case technically there is absolutely no reason why the Dow Jones and the S&P 500 should think about moving any further. Rather, the Dow Jones, particularly the Dow Jones, must give a good and a heavy bearish candle to come out of this kind of saturation. And I've shown you that what has happened when there was a first saturation, it has given a reversal, right? But now here we are talking about two consecutive saturations, that too on the weekly chart. Okay, so this is very important. So what does that mean? This means that in the next week, okay, anything beyond 36,248, okay, this will not be permitted as such until and unless the Fed chairman comes and he supports the bullish movement in the market. Otherwise this movement is technically not permitted. So only the Fed chairman, he can support or he can allow a movement beyond this. But if that happens, then that movement will last only for the next week, because in that case that will be the third, third saturation. Okay, and this is something we might not have seen, okay, after 2016 or 2017 or even before that. Okay, so last many years we have not seen this kind of situation, okay, in the US stock market. Okay, so let's see, okay, whether the Fed chairman is going to support again the stock market or not. Okay, so it actually depends on him and his comments, what he's going to say. Okay, so technically, yes, the entire US stock market, including the S&P 500 and the Dow Jones, is 100% bullish. 100% bullish. Okay, at the same time it is saturated. Okay, I think there was one more case here, particularly in the Dow Jones. Okay, it is not on the weekly chart, it is on the daily chart. On the daily chart, the Dow Jones is not just saturated, it is overbought. It is overbought and extremely unstable. So it is on, so the Dow Jones, so again the next week, okay, the problem, whatever happens, not the problem, but whatever happens in the S&P 500 and the Nasdaq, it will be derived, or it will be defined by the Dow Jones. So if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these daily updates or daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. The link is in the description. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. The second point of the agenda is the FOMC and the CPI. Okay, and also some recession part. Okay, now this recession part is again back into the picture. Okay, because if you notice, these are the CEOs of JP Morgan, Wells Fargo, Citigroup, okay, Bank of America. So these CEOs have recently testified to the Senate. Okay, and the CEOs, and all of these CEOs have confirmed that they are seeing stress in the banking system. Stress in the banking system in a form that now there are defaults on the credit cards, okay, loans and these, and they don't have that much potential. Okay, means in terms of earnings and all, they don't have that much potential to repay, and that is why the banks are now seeing increase in defaults, that the people, they are unable to pay their monthly installments, okay, or the loan repayments and all, and this is increasing. And the maximum stress is felt by the Citigroup. So the CEO of Citigroup, okay, has confirmed that Citigroup, okay, is seeing more of, okay, this kind of scenario. Then the JP Morgan CEO has confirmed, okay, and then the Bank of America CEO, okay, and also the same was confirmed by the CEO of the Goldman Sachs. Okay, they are saying that the recession is expected to be there either in the Q1 or Q2. Okay, now FOMC and the CPI. Okay, CPI data will be published on Tuesday. Okay, this means that again, last time, okay, this the gap up you are seeing, heavy gap up open you are seeing here, this was because of the CPI. Okay, because the CPI came in favor of the stock market, means the inflation declined. Okay, that was in favor of the stock market. That is why we have seen a gap up open and a sharp bullish movement, a unidirectional bullish movement. Okay, this means that if the CPI again comes in favor of the stock market, means if it further goes down, in that case the stock market again can move up. Okay, however, there is a condition that if the stock market fails to move up, even if the CPI comes in favor of the stock market, in that case this clearly means that now the stock market is waiting for Wednesday 2 p.m. not 2 p.m. Yes, first it will be 2 p.m. when the decision will be published, and then 2:30 p.m. Eastern time, okay, press conference of the Federal Reserve Chairman. Okay, so if there comes no movement until 2 p.m. or 2:30 p.m. on Wednesday, then there will come a very heavy movement, okay, bullish, bearish, whatever it will be, 2:30 p.m. onwards on Eastern time, okay, on Wednesday, during the press conference of the Federal Reserve Chairman. Because last time it was the Federal Reserve Chairman who was responsible and who gave this bullish movement to the stock market. And if you are my Patreon community member, then make sure you are available on Wednesday, especially from 2 p.m. onwards. Okay, and I will give you the frequent updates, okay, once the decision is published and during the press conference, so that you can make your strategies and you can change your plans accordingly. So now what can happen, what cannot happen? Okay, so these are all possibilities, okay, and speculation and all. Okay, however, recently I have seen a trend that when the Fed chairman, okay, supported the stock market, okay, by giving dovish comments, and the stock market moved up after his comments, then we have seen that just after 1 week, okay, he has changed his tone. Earlier he was dovish, okay, he was dovish here when the stock market moved up sharply. Then he went hawkish here. Okay, we have seen one, okay, this is the bearish candle. but again the stock market moved up. Then the CPI moved up, and then recently also, okay, he was hawkish, okay, and we have seen then a very limited movement, very limited movement, okay. So what we have observed, and one of the best part is that yesterday on Friday the non-farm payroll data was published and the unemployment data was published. Non-farm payroll data, it came better than expected, and because it was better than expected for the economy, this means that it was very bad for the stock market, right? The unemployment rate has further decreased. So earlier the unemployment rate was increasing and the stock market was anticipating that because the unemployment rate is increasing, people are losing their jobs, so the Feds will not raise the rates, or rather the Feds will go for the rate cuts. But yesterday on Friday we have seen that the unemployment rate decreased, okay, non-farm payroll data increased, confirming that the labor market is still strong. This news was supposed to act as a bearish catalyst for the entire US stock market. However, we have seen that the stock market did not give up, rather it sustained. Then what happened? At 10 a.m. Eastern time, the Michigan consumer confidence data was published, and this data, it came much better than expected and was positive for the US stock market, okay. But the point is that generally the US stock market doesn't consider this data, the Michigan consumer confidence data, okay. It is not that heavy and it is not much considered by the stock market. But yesterday, okay, when the non-farm payroll and unemployment data, okay, it brought in the negative or the bearish sentiments in the market. Then at 10 a.m. the Michigan consumer confidence data, okay, which is generally not considered by the stock market, it was better than expected, and the US stock market, and immediately it shot up, it moved up without thinking twice. So this means that as of now the stock market is very much selective in a manner that the stock market is reacting only to the positive news. It doesn't matter whether the news is small or big, whether the data is non-considerable or considerable. No, as of now it is considering only the positive news, okay. But if there comes negative news, means this was the hawkish comments of the Federal Reserve Chairman. He has simply changed his tone, okay, within 1 week, but the market then did not react much to it. It simply moved up, okay. So this selective approach of the US stock market, whether it will be there in the picture or not, it will be further confirmed on 13th is Wednesday, okay, during the press conference of the Federal Reserve Chairman, okay. If he supports or if he goes dovish again, okay, if he gives a reason to the stock market to move up, in that case the stock market will remain selective. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And for the daily analysis, the daily updates of the S&P 500 from Monday through Friday, you can join my Patreon community. And guys, I have one more program, that is stock market knowledge transfer program. So if you want to learn about the stock market, the movements, the hacks, strategies, trend analysis, predictions, okay, support and resistance, everything. And there is the spreadsheet, details are there in the spreadsheet. If you notice that what I'm going to cover, everything is there in the spreadsheet. These are the terms and conditions, and these are the screenshots, okay, of the previous meetings, okay, with the people who have participated in the program. So guys, once again, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis, okay, technically on the daily chart. This is the daily chart, okay, daily chart. On the daily chart, we have seen that I think from mid of November, okay, and until yesterday we have seen very limited movement, and not like this, okay. This is a heavy movement in the S&P 500. However, in case of the Dow Jones, okay, Dow Jones was very much clear and it was simply moving up, okay. So when you look into the movement here technically, then what you are going to notice is that S&P 500 is clearly bullish, absolute bullish, okay. But there was a change. This change was seen after, okay, this. So the change was in the MACD. The MACD, okay, it went bullish, but then it changed, okay, from bullish to bearish. I think this or this day, okay, on this, the Wednesday or Thursday, it changed from bullish to bearish. And because the stochastic RSI was also bearish, so we have seen there was a bearish pressure. and that was another reason that why we have seen on Wednesday this kind of candle. But on the daily chart, if you notice that the S&P 500, okay, it hit the saturation, okay, on Wednesday. Because it hit the saturation on Wednesday in the bearish side. So now see, this is what I wanted to show you, that whenever there comes, means this is how the market is, selective. Whenever there comes even a single saturation, just a single saturation, okay, it was there on Wednesday. Next day on the 7th of December, we have seen what? We have seen a gap up open. And with that, the gap up open, the S&P 500 has sustained. On Wednesday, there was a gap up open because of these 4 bullish candles. There was a special pattern. And I've mentioned this to my Patreon community members that these are very, very good chances, heavy chances that it can give a gap up open. However, it will be the Dow Jones, that only the Dow Jones can restrict the movement. So now you can see that how selective the market is. It is considering technical, non-technical, manipulated, whatever it is, whatever is in the favor of the bulls. It is selecting only that thing, okay, or it is considering only that thing. Now, anyways, so what we can see here is now that technically S&P 500 is bullish. It is not heavily bullish. It is not absolute bullish because the MACD is still bearish. Okay. Other than that, what we can say, or in simple terms, what we can say is that the S&P 500 on the daily chart is no, not 90. It is 80% bullish. 80% bullish. It has changed the trend from bullish to neutral for 1-2 days. Okay, but now it is 80% bullish. 80% bullish, saturated and overbought. 80% bullish, saturated and overbought. Now, because the movement in the S&P 500 will be derived or will be given or will be seen through the Dow Jones. If you look into the Dow Jones is holding. Surprisingly, it is holding. Okay, it is still bullish, not heavily bullish because the stochastic RSI has changed. It is still bullish and holding. But at the same time, the Dow Jones is, so we can say the Dow Jones is 90% bullish. Okay, at the same time it is saturated, not saturated, it is heavily saturated, plus it is heavily overbought. Okay, so you can see the difference, that the S&P 500 is saturated and overbought. The Dow Jones is heavily saturated and heavily overbought on the daily chart, and it is heavily saturated and heavily overbought on the weekly chart. So as of now, the Dow Jones is particularly, it is very, very unstable. Okay, that is why I am strongly suspecting that even with the favorable comments, even with the dovish comments of the Fed chairman, there might come a very limited movement in the bullish side. Okay, and whatever the bullish movement will be, okay, it will be limited to its all-time high. Okay, so this is I'm going to discuss in the next point of the agenda. Okay, so now I hope this picture is very much clear. But whatever is going to happen, okay, whether there will be the choppy movement, okay, whether there will be a clear movement or the downward movement, bullish movement, okay, so I will keep you posted through these updates on the daily basis, okay, to my Patreon community members, right? But guys, if you also want to join my Patreon community, and if you also want to get these daily updates, daily analysis from Monday through Friday, and you want to know where the movement will be, what will be the levels, what will be the zones, in that case you can join my Patreon community. And when you join my Patreon community, you will get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. And whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. So when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. On my Patreon profile, you will see that there are these 2 levels or 2 tiers. The only difference between these 2 levels is the geographical location. So the daily S&P 500 analysis and updates is for non-US and Canada residents. The daily S&P 500 analysis and updates for US and Canada residents. So when you subscribe to either of these, then you will get the daily S&P 500 updates, analysis and the probable movement from Monday through Friday, as well as the stock market opportunities 5 to 10, minimum 5 to 10 every week. And if you notice that many people have joined my Patreon community for last many weeks, months or more than a year, and they are getting these daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will discuss the probable movement of the US stock market, means the S&P 500, Dow Jones, Nasdaq and all, okay, through the S&P 500. So yes, again the same thing, okay. Tuesday CPI data, Wednesday FOMC decision and the press conference, okay. This means Monday is blank. Monday is blank. Blank means that historically we have seen that if that whenever such kind of situation is seen, okay, in that case what can happen, most likely what can happen is that because Monday is blank, Tuesday and Wednesday, okay, these are the very mega events. This means that on Monday we can anticipate very limited movement. If there will be a movement, then it will be very limited, okay. That is a non-technical reason or through the historical movement. And the technical reason is that the Dow Jones is already saturated, and it's not just saturated but heavily overbought, heavily saturated. So this means that if the Dow Jones goes, okay, or if the Dow Jones moves up any further, then again it will be limited. The upward movement in the Dow Jones will be limited, because the upward movement in the Dow Jones is expected to be limited, which is why the more upward movement in the S&P 500 is again expected to be limited, okay. And other than that, because the Dow Jones, if you notice the S&P 500, if you notice the closing of the S&P 500, it was at 4604.36, okay. This closing was below the previous high, that was 4607, okay. Although intraday it has breached the previous high, this means that whatever the psychological reasons were there that it failed to breach again and again the previous high, okay, those reasons are now out of the picture. But because the closing is below the 4607, okay, this means that now the S&P 500 will again have to struggle, or will again have to see or face the resistance from the 4607, until and unless S&P 500 gives a clear closing above 4607. Technically it is not allowed to move up, whether it happens on Monday, Tuesday, Wednesday, Thursday, Friday, or any day, any week, any month, okay. This is simple. Now the other case, because as of now, see, we cannot anticipate and we cannot speculate, okay, what will be there, okay, through this the CPI and the FOMC. But the good thing is that we know that what the technical movement will be and what will the limits. The limits are very, very specific, very, very much clear. The limits are that any movement above 36,248, okay, it is not acceptable, or it will make the situation worse. It will make the situation worse in the sense that the Dow Jones will be seen trading at the levels we have not seen in last many years, okay. And this kind of movement is generally seen only and only when there is a long-term trend for 2, 3, 5, 7, 8 years, that there is a continuous long-term trend, everything is well settled, the interest rates are low, everything is fine, okay. So this kind of situation is seen in that case only. But even in that case, means when the long-term trend is there for 4, 5, 8 years, okay, whenever this kind of saturation comes, then also the indices they gave up. Means if the market doesn't want to give up, then again for the next week also it can give some kind of the small candle. However, the chances for this kind of movement, okay, are very, very less than 1 or 2% for the next week, because the CPI data is there and the FOMC is there. So these the two events will compel the market to give the movement either this side or this side, but the movement should be there, okay, because of these the two events, right? But the upward movement, so this means that even if the CPI comes in favor of the stock market, Federal Reserve Chairman supports the stock market, okay, in that case also, even if the Dow Jones try to move up, then also it will face heavy, extremely heavy resistance, and will become more unstable, heavily unstable. But you must remember that I am talking about the weekly chart. Weekly chart means that the closing by December 15th, that is Friday, okay, December 15th Friday, the closing of the Dow Jones must be red, must be red on the weekly chart, okay, or the weekly closing must be red, okay, in order to red means not just normal red but good red, okay. This means that if the Dow Jones further moves up, okay, so we have 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, okay. If the Dow Jones further move up, then where it can move up? So it can move up from the current levels, and the current levels are 36,000, okay, 240 something, to the previous high, and the previous high is 1.91, or let's say 2%. 2%. So if the Federal Reserve Chairman supports the stock market, okay, in that case it can move up to like move up by 2%. But again, it doesn't matter that where it is going to move up or where it is heading to. By Friday, by December 15th Friday, the Dow Jones will be under obligation to come down and to be red. So this is the technical obligation. Now whether it gives or it remains red from Monday onwards or Tuesday or Wednesday onwards, okay, it depends. But by Friday, by December 15th, the Dow Jones must go red, must trade red. This is the technical compulsion. What does that mean? 2% in Dow Jones, okay, so this is what we have discussed last time also. 2% in the Dow Jones, okay, means S&P 500 is like 4.6% away from, or 4.6% away from its previous high, okay, whereas the Dow Jones is only 2%, 1.9%, okay. This means that if the Dow Jones fails, okay, around its previous high, it struggles at previous high, because it is already saturated, very heavy saturated, 2% and sustained, okay, with this the 2% movement, exceptional, phenomenal, okay. So this means that if that happens, then only, if the Dow Jones is able to sustain, then only the S&P 500 we can anticipate that it can move up further towards 4,700. Okay, simple. But for that to happen, the Dow Jones must move towards and must be there, okay, around 37,000. Okay, this is the previous high. Okay, and must sustain. So let's see. Okay, what happens on Tuesday. Okay, if not on Tuesday, then Wednesday it will be very much clear. And if you are my Patreon community member, okay, then on Wednesday it will be very much clear what exactly is going to happen, and what will be the picture after Wednesday. Then see this movement from here to here, okay, this is the upward movement. This was from the dovish comments of the Federal Reserve Chairman. This upward movement was because of the CPI. This is the gap up open CPI, and then some other data and the upward movement and so and so. Okay, this means that the stock market has already priced in. The stock market has already priced in the facts and the comments and the expected CPI data. The stock market is assuming that the CPI data will be favorable, means the CPI inflation will come down. Number one, it has already priced in, it has considered, it has speculated, and it has moved up. Secondly, the stock market has assumed that the Feds are not going to raise the interest rates, rather, okay, they will keep the interest rates as is. Again, that was also priced in. Okay, one more thing, that the market is anticipating that the Feds will go for the rate cuts as soon as possible, March. Okay, so market is considering that there will be rate cuts, okay, from March. However, in the recent FOMC minutes of the meetings, I have shown you through the document, okay, from the Federal Reserve, that Feds are not talking about any rate cuts before June 2024. Okay, they have written, they have mentioned this very much clear. Okay, this was very much clear in the document. Okay, so the stock market has considered the CPI, the pause, and the rate cuts from the March, these three things, and have moved up. These three things are priced in. This means that if any of these three things goes against the stock market, if the CPI data, if the inflation gives a reversal, okay, or if the Federal Reserve Chairman goes hawkish, or if there comes the comments from the Federal Reserve Chairman that there won't be any rate cuts until something, okay, some event happens or before June or July. If anything goes against the stock market, this means that the stock market will be back to the levels from where it was supposed to be, from where it has actually priced in or has speculated that these events will happen certainly. Okay, So that is another reason, a non-technical reason plus the technical reason, that why we are saying that any upward movement will be limited even in the favorable scenario. Okay, limited to what? Limited to at most to the previous high, right? So, well, this is the S&P 500 technical analysis. Okay, so let's talk about the levels and numbers. Okay, levels and numbers are again, very okay. Numbers are very much clear. Okay, there is no change as such. Okay, from the previous one. So we need a closing above 4607. Okay, not just one closing. Okay, because it is going to breach the previous high and sustain. Okay, so we need 2 or 3 closings, consecutive closings above the 4607 to confirm that there will be more bullish movement. Okay, one closing above 4607 and the second closing below 4607 will simply cancel. Okay, this the condition. Okay, now fall. Okay, if there comes the restricted movement, okay, through the Dow Jones, okay, in the S&P 500, just like what we have seen in the previous week, okay, if it remains choppy, okay, in that case a fall will be where? Fall, okay, fall to what level? Fall to 452737. Okay, 4607 in the bull side. Anything a sustained movement above 4607 means more bullish movement towards these are previous levels, okay, or 4700 or so. Okay, a sustained movement below 4607, okay, or a drop from here, okay, will be 452737. Once the S&P 500 goes below 452737, okay, then there won't be any more bullish movement for some time. Okay, it will change the trend from bullish to neutral. It will remain in the neutral trend. Okay, and then it will be highly and heavily susceptible for a fall. I'm not saying that there will be a change of trend from neutral to bearish. I'm saying that there will be a very heavy fall. It will be susceptible for a very heavy fall, at least to these these levels, and these levels. Okay, whatever the levels will be on the daily basis, okay, I will define the levels and the zones where we are anticipating the movement. Just like the previous week, it was there and it moved exactly, okay, in between these levels. There was like 2, 3, 4 points up or down. Otherwise, it was very well confined in between the levels. Okay, I will define the levels. So a straight fall from 4607 to 452737 is not possible as such. Okay, intermittently it will get support. Okay, my Patreon community members, they know the support levels and all. Okay, but yes, this thing is clear that losing 452737 means it is not good for the S&P 500, because in that case it will be compelled, it will be forced to complete its reversal cycle. Okay, reversal cycle means it will have to come down to this level, to this level, to this levels, to these levels. Okay, or it can come down to the 200-day EMA. In simple words, 200-day EMA. Okay, intermittently there will be some bullish reversal for 1 or 2 days. That will be because of the stochastic RSI if it goes saturated. Okay, recently we have seen that was there. Okay, similarly that kind of movement will be there. So let's not speculate much, because the event is on the horizon, the CPI data and the FOMC. Okay, once the data is published, the CPI data is published and the FOMC decision is published and the press conference of the Federal Reserve Chairman, then only something concrete, very much like 100% can be said. Okay, but as of now you should prepare yourself, okay, like this, that a closing above 4607, 2 or 3 closings above 4607, okay, means sustained or this more bullish movement towards 4700 or so. Okay, but at the same time you must not forget about the Dow Jones, because as of now it is not the S&P 500, okay, it is the Dow Jones that is controlling the entire US stock market. Any restricted movement, any fall, any upward movement in the Dow Jones, okay, will give that kind of support, okay, bearish, bullish, or that kind of movement, or that kind of sentiments to the entire US stock market. Okay, second condition is 452737. As long as S&P 500 is sustaining above 452737 zone, okay, it can hold bullish, not a problem, it will hold bullish. Okay, yes, the trend can change from bullish to neutral, but still it will be somewhat bullish. It can anytime, okay, it can regain its bullish trend. Okay, but losing 452737 is not good, because this will then compel, this will force the S&P 500 to complete its bearish reversal cycle. And whatever is going to happen from Monday through Friday, each and every day, okay, if you are my Patreon community member, okay, I will give you the updates. But yes, but make sure, to my Patreon community members, that make sure guys that you are available on Wednesday, especially on Wednesday. First you must be available on Tuesday morning, okay, so that I can give you the interpretations of the CPI, and then you must be available on Wednesday in the second half. Okay, and I will give you the frequent updates, the frequent okay, interpretation of what the Federal Reserve Chairman is saying, and how the stock market is going to act or react to it. However guys, if you have not yet joined my Patreon community, then you can join my Patreon community to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and as well as the stock market opportunities. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon, and guys, give a thumbs up or hit like if you like this video. And if you have any questions you want to ask, then please feel free to ask your questions through the comment section. And also I've given the link to my programs in the description of the video and also in the comment section, and also my email address is there. So whenever you want to participate in any of these programs, you can simply drop me an email, or if you have any questions that you want to ask, then also you can simply drop me an email. Okay, so all of the links are there in the description of the video and also in the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of December 11th, that is from December 11th, which is Monday, through December 15th, that will be Friday.